You already know what it is. Come on, come on, come on down. Get your Ficky Holly, Ficky Wood trades. All right. Today we have premium discount, ladies and gentlemen. As you know, in the last masterclass, we went over order blocks. You can't do anything in this game without an order block, a specified support and resistance zone, and knowing exactly where your premium and discount is. And today we are going to go over premium and discount. So as you know, you have your order block, right? And here's your order block, this and that. This one right here is the actual order block that is supporting this zone, this new region here. I don't have it marked out because, as you guys know, I like to you don't want to focus on the newest price action and how the price is responding to the newest price action. And so the newest order block is right there. So I am studying what is happening with this new order block, and this is now the highest order block in the discount of this premium and discount zone. So all of this is really simple. I just wanted to go over this on a few charts so you guys understand the difference between your premium and discount, because just as simple as put, your buy is going to be stronger from your discount zone. You're going to have more of the premium range to be attacked from the deeper discount zone. And so as this price came, it is playing with the premium and discount. That's all it's doing right here. When people get confused as to like what a consolidation is doing, a consolidation is going to be playing with your premium and discount zones. Like even this right here is its own premium and discount zone. Once this generated, it treated this as the local discount, right? So of course it's in the overall discount, but then it went also into a local discount. Then you have this as a premium. So, right, it's going to want to trade up into that zone somewhere. You see how it's trying to get up in there and do something with the orders that got left behind in this region that got traded through. So once this region got traded through, as the price comes back into this premium zone, this is where they're going to be getting out of those positions that got traded through. So now they're holding a negative balance because they bought from here. This was a big push up and a big buying region. And so I had been reluctant to mark off this bearish order block just because sometimes I don't want to have an idea that I'm bearish when I'm not bearish. So I would really want to just mark up my buy zones, right? I would just want to mark up my buy zones going into this block. Where if I have this block marked off, sometimes in my mind, I might be more biased to short from this block. And of course, there is a good short from this block. But I would more so want to focus my long revisit trades. As you can see, they're a little more. Those are the ones that will take you into a higher range in this premium discount dealing range. And so understanding premium discount dealing range is a quintessential aspect of understanding where to trade from, as well as where your local support and resistance is likely to form and which ones are likely to be respected more. So once you understand this premium discount, this is the current premium discount range on gold. And so a lot of people have been coming to see the light when it comes to gold and how many pips it can move over a course of a few sessions. And so my team has been enjoying gold. These were my take profits that I had for my last long. You see, one of them did get hit. No, actually, there were two take profits. There was three take profits. There was one here, and one here. I don't know what happened to the other ones. Maybe it's down on a lower time frame. I'm not sure. Yeah, there it is. Take profit 1. I came in here. Take profit 1. Take profit 2. Take profit 3. These are all going into the premium range. The premium of this dealing range here. This is the dealing range. Discount, premium, middle line separates the two. And this is not just algorithmically distributed. I mean, I know a lot of people love to talk about the algorithmic distribution of price, and of course the robots code these, but traders also, you know, are hip to this as well. Traders have been hip to 62% Fibonacci retracement and what have you. So this is nothing new. This is something that all profitable traders have figured out over time, and understanding this plus order block, precise support and resistance, supply and demand, you are able to come into any price action and determine where your points of interest are in that, within that price action. And so a lot of the things that you will see I have marked up on my chart, you will see the price respond to it over time, like this right here. I mark these things when they're generated. I don't mark them after it happens. I mark them when they happen. So from the genesis of it happening at the beginning of the markup to where it affects price the second time or third time, you can see that on my chart. This one right here, I marked this spot. This was a specific zone that was very interesting in volume. This here was a specific zone, right? I marked it here, but you see it came to it. The bodies met that resistance right there. That was it. Now that's algorithmically distributed. Usually when that happens, that is trades that were coded to get out at that point, right? And those are just coded in the computer. That's why you get these zones. And then again, boom, FEG. I didn't have it marked. There's an FEG there. And then I was more interested in this compressionary zone. I was more interested in that. Let me see here. Is this on the, yeah, this on the 4 hour. I was interested in this body, this downward close and an upward close. I was more interested in that body than I was the fair value gap. But your order block is always expected to happen inside of a fair value gap revisit, right? And so I like to combine all of the artifacts that are in the premium and what's in the discount. You want to look at what's in the premium and what's in the discount to determine what the places that you should be marking. Look, this reclaim zone right here, a lot of different deviations, whatever. You start getting into the real particular stuff when you get closer to price action. Just like this is a relatively higher high, then a higher low, then a lower high, lower low, right? So that was an SMC shift, and then after the shift, it meets what's in the discount, creates a new order block right underneath the discount into what the most easily attainable premium range artifact, liquidity artifact that is left behind in the premium. So this is premium discount isn't easy. You just take your Fibonacci tool. I like to use the dashed 50 for the main premium discount tool that I use. Everybody in my Discord knows I have all kind of different tools. Let's just for sake of clarity, let's check a different chart. You guys like the euro, so let's just go to the euro. I know it's a clean chart for me. Don't mind me. I do have my oscillator. These oscillators will tell you when a price is in a premium and in discount as well, and that's what these oscillators are good for. If you know what you're looking at, you know. This line is actually the premium discount line. The middle line is more of a force line of volume, but this line right here is really telling you, like right here, it's in discount, right? It's telling you it's under this line, it's in discount. Above this line is pushing premium. So it's going to, so then you have to know what your dealing range premium is when it starts pushing premium. And so you got breaker structure, but this from here to here was a dealing range. And dealing ranges are particular to stretches. They can be particular to stretches. It can be multiple stretches. Here's one, here's a retracement, here's one. So it could be multiple. But sometimes in dealing ranges, you do have to go try to figure out what actually is working as respect. So this is my total PD, because you do have the quarter PDs that are respected here and there too. You see this was respected to the line when it came back to it, because this was the original algorithmic stretch of price. You can use impulses to measure PD as well, because inside of that impulse, liquidity will be induced inside the impulse a certain way because of what was left behind in the impulse itself. So there's many ways and many different things you can do with this so-called premium discount, both algorithmic and organic. And so this is what I would say would be more of the organic bottom. So I would use this as the premium discount of this range, right? From this, because there was a down and there was a steep up. It revisited what? OTE. And as you can see, I did have a previous premium discount array as well. But let's take a look at something as well. When you want to know which stretch, this is something that I use when I want to know which stretch of price to measure for premium and discount. I'll do something like this. Let's widen this out. I'll do something like this, right? This is a premium discount array, right? And if it makes a price run and it goes into its proper retracement back into right here, we're going from premium to discount, and if it makes its revisit back into premium, then I'll use the height or the low that visited the premium discount as the new measurement place. So I would come from the discount, the premium revisit, down to the new discount as my dealing range for this new one. So whenever you're wondering like which one to use, which height or which low to use, that's a good, if you can't easily see it, then just look for the last time price revisited a premium discount retracement. And of course you could either use, and one thing is never righter than another, but you can always use this height to this low as well, or you can use this height to this low as well. And of course all of these are individual premium discount arrays as well that will be referenced inside of the smaller movements. And so just like with the order blocks, you have to kind of use intelligence to know as it progresses in price delivery what is happening. That's why sometimes you won't trade. This is how you can determine it. A big apprehension of most new traders is not really concretely being sure when you should trade and when you should not. It's always some small emotion that you don't know, or that you're gambling or whatnot. You feel strange when price starts moving around, because you just don't know where you're at. Once you know where you're at, once you know what the potential of the dealing range is and where those liquidity area of interest are that exist within the premium and within the discount, which OBs what should happen with an OB bullish that forms in a discount versus what should happen with an OB bullish that forms in a premium. And so when you know the difference between all of the classifications and where they exist, you can kind of start putting together a different picture. You can even also use, like what I do, I even use oscillators, as you can see. I use a lot of different confluences actually, because we have CM pivots here, right? These are CM pivots for the week, right? You can see how they're getting generated. This week is forecast to be a more either consolidatory or being able to use these levels to break free of the resistance and support levels in this zone and really begin to run a different direction as well. But we are right at where? Oh, why is price settling here, huh? Why would price settle at the 50%? Because it's the most magnetic, right? The 50% line is always the most magnetic, and it's always the most rejective and repulsive line as well. Once price gets to it, you see what goes through it, comes back to it, bounces off it, sucks back to it, and you can expect it to use. Oh, isn't that interesting how the premium and discount line is almost right in the middle of this as well? See, when you start using different tools, I even use, who knows about Ichimoku. Oh, isn't it crazy that we're at the support in the discount where the Ichimoku lines, the support and resistance lines are, and the cloud? Isn't it crazy that we're right in the middle of the liquidity cloud of the Ichimoku and we're coming out? Right? So when you start putting all these different things together, let alone volume, right? You should get more bullish volume in a discount, right? And you should get more bearish volume in a premium, right? That's crazy, isn't it? Oh my goodness. Ay, Dios mío. And so let's just go to a higher time frame chart. Let's go to your daily chart. All right. And so as we can see, there is a larger dealing range here on the daily. And this is your current PD on your daily. So what would price be seeking? Look for something that's in the premium that has not yet either to be reconciled or to be revisited, right? So here we have a huge array. This is a huge bearish array that is highly imbalanced. In this particular instance, because the artifact is so small, that level could possibly do something crazy, right? But this is what I'm interested in this chart. This does exist as an IFVG flip. It does exist. And as you see, you also have further artifacts that were affecting price, like this, right? All of this was already stacked. All of this has been stacked. All of this has been stacked. And I have this out here for a reason. Boom, OTE, because I was using this to monitor how big this zone was for a retracement, right? Here to here, boom, boom. When this happened, boom, it created the OTE entry zone. It also had a propulsion block up here in one of these FVGs. I wanted to see it hit the bottom half of this propulsion block, take to the rest of the Fibonacci retrace, and go ahead and reject. You had your IFVG here for liquidity exchange. All of this is liquidity exchange. All of this is equal liquidity exchange all up in here. Liquidity previous block, liquidity exchange, right? These are all liquidity exchange points right here. So, right? And we just focus on the newest ones to know where the newest zone will happen to move from in these premium discount arrays. So now we have our current premium array that has also a mitigation block. This is a mitigation block right here. This is a mitigation block right here. I'm more interested in this Reaper on something up to the effect of price in this range as well. We might just get a 50% and then a continuation down, but I want to see it wick up into this zone to really pick up some orders, and then we can really start attacking what I would think to attack this low right here. I don't know why we wouldn't attack any of this. This is just, I mean, this is a bullish pivot zone, but look, it was a failed swing high. This did not, it went to a high, then it went to a low, and then this low, this whole low array was supposed to send price, supposed to, right? It's just, that's what's supposed to happen. It's supposed to send it to an equal high or lower high. So measuring how far it gets in this dealing range, which it only got into the almost a golden zone retrace here, which we forecast on the daily, on the weekly. And then it just started peeling down because we saw, right? Head and shoulders, almost broken neckline. And it's just, it started that tumble from not being able to top this balanced price range here. So that's what was in the premium. And so now we're just traveling into the discount to see how far we can go into the discount, because this is a lower high than this one, right? Higher time frame on the weekly and the daily. This would be a high and a low, and then a lower high than that high. And so now this whole array here, this is supposed to cap price off this OB, this balanced price range, this IFVG, this flip zone here is supposed to send price with not allowing price to come back up until it can do this and do this and do that and do this and do whatever. But this here should not allow price. It should keep supplying sells. It should keep supplying short until it reaches this. That is the goal. This here, even this FVG was my first. That's why I have this in the discount, because this is my first. Was my first support zone that had not been interrupted yet. This demand zone had not been interrupted inside this OB yet. The orders had not been absorbed in this discount range. So this is automatically, gonna make this happen right here automatically and cause a rebalancing of this right here. So we want to see how it treats this rebalancing here. All of this is balanced. This candle is balanced. This is a compression block, balanced compression block candle right here. I'm not going to mark it off because I don't want to give myself any ideas or contentions at the 50%. You're always going to prioritize the higher block as your interest. If you do get a continuation from this block, you can enter in, probably attack this low right here, but you would expect more so of a soup back into this. You always expect your double bottoms in your fair value gap. You always expect a soup and a double bottom or a sweeping of the first low that happened in the fair value gap. You want to see this really swept. You want to see this swept here before you go long, if you want to go long, right, into this zone. But if it goes up here, we can expect it to just crash through this, and go further into this right here. If it goes up here and absorbs first. If it comes down here, then this would be a long signal. If it created another order block in here and then rejected, you expect double retest of your short in this particular situation. And these are days, ladies and gentlemen. These aren't minute bars. These aren't minute bars. These aren't hour bars. So you get what I'm saying when you start really digging into premium and discount. It moves slow. It's going to move slowly like this. Then it's going to move slowly like this. It's going to try to retest this order block here. Or I should say any of this. It's really going to try to rebalance this gap right here first, and it's going to slowly just be able to get up there. This is a mitigation block. This order block here, I have not named it a mitigation block yet. Matter of fact, just because I can't leave it like that, I am going to name it a mitigation block. And your mitigation block is always usually going to be at around 50% of the new dealing range, because as price tumbles through it, it tends to go twice the standard deviation. If you measure this to this and then project it out, it's going to be twice the standard deviation. I don't usually do deviations on days, but deviations is a whole nother, that's going to definitely be a whole nother video in a masterclass series for sure. His deviations are crazy, right? So boom, 2 deviation. You see, I didn't use the wicks, but you can also use the wicks, but the bodies are usually more accurate. So I use the body, project a deviation. This is, again, this is daily. This is daily chart. So if you did reject off this propulsion and then use this to this, if you're anticipating a short, then you measure, you already have your bottom measurement, then you get your top measurement, get your order block. This is your order block. Get your new order blocks, measure from the body of those order blocks, and then you create a target somewhere here. Of course, I had all this laid out before I even needed a deviation. That's just understanding that it's going to send it back into the discount of that range. And so let's go ahead, because this is kind of cluttered. I just wanted to keep that there to remind myself where the nearest OTE came from. So the whole entire dealing range is going to be something like this. The entire deal. This is the entire dealing range here, coming from the top to the bottom. And this is the overall. This would be the overall dealing range, probably on a more weekly level. So if we go to the weekly charts, right? Right. So this is the weekly dealing range for this zone, right? So premium, right? Your order block here on the weekly happened in a premium. So we can expect this what? We can expect this weekly order block. And we already expected a reaction from these, from this array, right? This big array here is still controlling price. Then you have this bearish order block here still controlling this bearish order block here. Now this is the newest weekly bearish order block. It traveled up into this like halfway of the new weekly order block. Exactly what you would expect. Again, I don't really trade EU, but it is one of the easiest tradable charts. It is one of the easily tradable charts just due to how it respects its premium, discount, premium, discount, this is 50% of this right here. So it traveled past 50% into the premium discount, right? 50% right here, somewhere up in here of this long leg here, 50%. And then it traveled to the what? Discount. Then where it go again? This is about 50%. Back to the premium. And so now you have a new premium discount. Back to the what? This is about 50%. Back to the premium. We're next to the discount, right? And so now this is our dealing range that we're in now, because we're in the discount of what? This dealing range from there to there. So about 50% is here. And now we are in the what? Discount. And now we're going to see what they do with the intermediary level premium array, which is somewhere from here to here. So we can probably expect it to come and manipulate the body of this new what? Bearish order block. Well, I would say in the form of a propulsion block, because it did what? It went to 50% of the dealing range and rejected back down very vociferously. And that is propulsion, like a rocket ship. So that's how you have it. I encourage you all to take this to as many charts as possible. I do have a complete stocks watch list as well. This is my complete stocks watch list that I would trade options on. These are all the options that I would be very interested in if I were to trade options. And so you can take a chart that is similar to something like a Boeing. I know a lot of people trade Boeing. How about that? How about the premium discount of this weekly Boeing chart, right? And this is a weekly, right? And if you are day trading stocks, This is how you would hold stocks as well, right? On the weekly premium discount array, right? So it's you take these measurements on different charts. It's just like a no-brainer, right? So this would be the discount range here, or you can come here, whatever is really close. So this is the discount range here. This is the new premium range here. So there is something that happens when you push past the trending, right? Like this is premium, right? This was the previous premium. Then you go to a discount, right, of this range, and then you push past this premium, right? When you push past this premium, that is where your standard deviations come in at, because once you have something like this and you don't have, I should say, yeah, right, this is the weekly, and you push past the premium and you don't make it to your deviation targets. These are your lowest deviation targets, right? Which is set 178, 2, and maybe 2.5. These 2.5 is where you would expect a real rejection to come from. If you don't make it there off of a push, that means that was a weak pivot point. Even though it had its fair value gap and it had its gaps and it did its crazy stuff, it went down really far, so it had to go far up twice, at least 1.78, to build some structure in here and then potentially push higher deviation targets. But because it didn't reach this is a sign, like when you start getting into this, is a sign that there might possibly be a higher premium array, right, that is pushing that down. If you are at all-time highs, these also function the same way. Let's just say there was no high over here and it did this. You would also know, oh, this is a failed. If this order block here fails and becomes a bearish pivot point, it's going to drop crazy, right? And that's exactly what it did. It dropped crazy. You also were in the grips then now of a crazier order block as well that existed. We're in the what? Premium, right? Right? Exactly. So now you sweep highs. This is a sweep high and a retest all at once. It sweep high and retest and failed the retest. Very much so failed. And it swept these, swept high. It swept everything it could before it succumbed to the supply and the failure swing, right? Break, boom, break. Now it's just crazy. Now you just got the crazy array, because now you got a breaker. This block right here was supposed to hold, so now this block is a breaker. Oh, sorry, BB. So now Boeing has a weekly breaker on the chart, and that's crazy, because now it's just, now you got an order block with a breaker. Now it's really crazy now. I should say propulsion block. So this is all on the weekly. So you can just see how stocks are just, they're taking profit left and right now. Right. As we all know, I don't read this chart a lot, but I'll keep that. I won't use the propulsion. I like to keep my charts individualized on time frame when I'm reading, because when I switch down to the daily, I will sometimes keep the weekly on the daily and the daily on the 4 hour and so forth. But I usually don't keep markings at least 2 charts below. Once 2 charts go by, I want to use more specific markings. So this is the daily. You can see this type of profit taking that's happening here. Again, this failed swing projection here was supposed to reach here. It just could not get past that order block. So now you have a whole nother swing projection here. And this was, for all intents and purposes, like one major swing up. So this chart is telling us it's not going to be trying to take any of this discount too serious until, right? It should take the discount serious after it sweeps this. This is all the discount range, right? And so we can even, on this range, where are we at? On this range, we can even do something like this and place the OTE. So now let's take a look at what's in the OTE of this range. So in the OTE of this range, we have somewhat of a gapping structure. We also have a propulsion block here, a mean propulsion block here, right? Boom. I don't want any of these on the higher time frames either. So maybe we're aiming for that propulsion block, or maybe something up in here, like cleaning up this gap a little bit. Then you got some fair value gapping there, but maybe it shouldn't go too far beyond this. So maybe trying to clear up this inefficiency. These inefficiencies are crazy. It did pretty good right here. Yeah, it did good. It balanced that. Maybe this small place here would be wicked because it's below the OTE, what you would want to do for a buy continuation. We do know that there's going to be not a bloodbath, but there's going to be a steep profit taking, as we can see, because they want to devalue everything just so we can get our next premium run. They're going to print us free money when they decrease the rates of the US dollar. And so that is a free money print. They're saying that will be the next adjustment, will be the decrease of the US dollar rate, which is going to bring the dollar value down. And so once that dollar value can come down, everything can kind of climb back up. Gold will start going crazy again. Stocks can start going crazy again. But they want us to be in a discount. They don't want us to, this is cheap. If they just keep letting them get this free money to the top side, that's just a cheap run. It's fake. It's very inflated. Then when profit taking hits, it'll kill the little man. That's what happens if they let this keep going up, it will kill the middleman and the lower man and the middle class. It will crush the lower class and the middle class who are getting in on those crazy waves, and then it just deletes their accounts all at once because they're already in profit way back on these moves now. If you look at the NASDAQ, if you look at any of this stuff, they've been in profit for so long in this wave. Look at this. This is insane. Look at these daily waves. Look at these weekly waves. They're in profit. So if they keep letting it go up, the downfall will be from like here to here, because this is the supporting block. So imagine all the people who are buying here and what would happen to them if it went here, especially if they're trading, or especially, it's just a terribly treacherous environment when you let it go beyond certain deviations, right? Because this deviation was, and this is how you can determine overextensions and stuff like that. Look at this is the daily. This is what's coded into the system. This pull from here to here was coded into the system to be delivered somewhere in here. Anything beyond that would be a gross and neglectful overextension, right? This was the last down into the furthest rebalance that could be achieved on this chart, right? This was the last down into the furthest rebalance. Right? Boom. So this measurement can be used to determine something up here. Of course, all of these will also be used, and this is how you stack deviations. You do want to stack deviations to see exactly what the system is. It gets more and more accurate as you go. You see how the 4 was here, and then now the 4 is here, and you see how it goes, right? And then of course you get, it starts getting smaller and smaller. Like this one, let's just say you did trade or you wanted to know what this one was going to say. This one wouldn't happen to be too much different, right, than the height already. And then this one did good too. Hard to move my mouse like this. But you see how each one starts getting smaller and smaller as you go up, right? And it's just measuring the bodies from the top to the bottom of the pools. And they all start giving you like the same type of idea here. And then you start getting the new ones, and then you start getting failed projections where it's just failing to get to the fours and the higher numbers. It's just failing, and it's getting rejections. Boom, I already forecast in the Discord that this void was going to be this Reaper and this void was going to be some crazy exchange point. Boom, they used this void to just catapult price down. As ICT says, once you pass through these, and it got that close through it right there on that day, that was your signature there right here. And this, we are in a large premium discount array with this daily on the NASDAQ. And this is just how it's done. This is how they do it. Premium discount, and they keep it all pretty much in a range. Everything is usually pretty much gonna exist within a range like this. And it's going to be pretty much controlled by all the powers. They tell you what they're doing. It's not controlled. It's not manipulated in the sense that they don't want you to know what's happening. That's the fallacy. A lot of non-financial chatting heads, talking faces will have you believe, this and that or the other thing. But it's not that. This is just the way it is. And if you know what these things are for, premium discount, order blocks, deviations, these are all just like the bread and butter. And then you have all kind of different arrays, of course, like breakers, blocks that got broken that weren't supposed to or should have been demolished at a certain time. Reapers that will all constantly pull price back. Like once you see a Reaper in a void like this, I had this circled. This circle that I put here, this small little circle that I put here, right? That circle has been there ever since that day. I don't usually leave artifacts like this on charts, like circles and this and that and different things. You can see I start at more previous price action, more recent price action. I will stack more when I want to really see how an array is stacking. When it gets really technical like this, you'll see I stacked a lot of stuff up in here on the smaller time frames to really get an idea of what was happening. Anybody who looked at my charts on the Discord recently has seen what exactly I've been doing with my array on NASDAQ. And it's like, whoa, what is all that stuff? Oh my goodness, my eyes have to get used to looking at all this stuff. But all of it is important because it started getting really technical. And if you don't know what's happening inside the premium array and what are the artifacts that are in the discount array, then you will most likely just be confused. All this will confuse you, So once I've seen it break into the overall, start breaking into this LR, this is all low resistance at a certain point, right? Because once this starts trailing down, it's targets on targets on targets. And of course, I haven't reviewed it yet, but this is our, this is a true OB. It had a consolidation to the left of it and then swept the consolidation to a point. It didn't make it to this right here because this is the true supporting array, right? All of this is the supporting array. But this is the OB that will give us a premium run. At this point, this would be all of this array here would be what we expect to give us our next premium run. OB, true OB. Current interval only. I will leave this on the 4-hour chart. And this is how you leave it on a certain chart or another. So it's on the 1 daily and it's on the 4 hours. So only those two charts will see this order block, because on the hour chart, I want my 4-hour chart order blocks, and so on and so forth. And when I get to the lower time frames, I don't want anything except for recent price action. Right? So now that I'm on my 4-hour, I can see where my discount zone is at, which is right here. I can see this is my recent deviation that I was projecting from that session. And of course, you want to keep moving those down as time progresses, as price progresses. The next measurement was something like this. When it's choppy like this, to get a measurement and the bodies are choppy, you can use that. You can expect that this will send price, especially in a zone like this, right? You can expect that it will send price to this maximum stretch, right? Like this is always gathering so many orders violently. There's a mitigation. There's all kind of stuff here that is chopping between. This is just a wall at this point of price, compression block mitigation at that. So this is all violent price. Whoosh blocks like this are just violent price zones. Once it comes back to these zones, like this, it's just a violent boom. All these little squished blocks right here. This is all like a lot of compressed orders all at once, plus like massive releases all at once. So once you get that void, once you get that Reaper, I've been eyeballing this. Like I said, anybody who's seen my charts knows that I've had this right here and anticipating this. So again, this standard deviation coming from such a wild choppy point, you can use the wicks right here in this zone when you got all these chopped up candles. That's power, that's pressure. Other than that, you would use the blocks. Like there's not as much pressure here, right? So you can use the bodies. But when you start getting that pressure, you can see a longer release ahead of time in this type of environment. So boom, you did eventually get to your 4 deviation here on the wildest swing of the impulse. You got to your 4 and then back up to relative 50% here, right? Here to here, 50%, relative 50%. There was a compression block here. There was balance. This is all balanced price zone. So it didn't need to come up to any of the rebalance in this zone here, right? It already collected those orders, hit the order block. So now all of this is just balance, 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 balance up to, here in this compression block. Maybe has some smaller time frame imbalances. Boom. Right. And usually you would expect it to climb this. Once it got above this, you would expect it to climb. Once it closed above this, you can expect it to climb and start using that. It uses closings to really tell you what's up. So it never closed. It just hit and then rejected. So this gap is still a gap. Right. So a lot of the people on my Discord, I wasn't trading these last few sessions, but a lot of people on my Discord like, oh, let's buy, let's do this, let's do that. And I'm looking like, yo, you people are mad. Look at this, what you're trying to do. Right? Pay attention to your closings. Pay attention to your actual displacements. Failed displacement right here and swept the 4-hour block here. So it was a sweep, failed displacement. You know what that means. You get a sweep and a failure. Man, that's a new bearish order block right there. Boom. Boom, 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 and a wind down back into your deviations and a wind down back into your bullish array, your supporting bullish array. And if I'm not mistaken, it gets a little bit weirder when you start talking about premium discount on certain timetables, because I wouldn't really try to use, you could use this. Let me see. Yeah, because this had a really good down. So you could also as well use this to this as a premium discount. So something like, something like this to this, you could also reference as a premium discount. But I hope you guys are getting the gist of this premium discount in this premium discount masterclass. This will help you so much. A lot of traders, you know, a lot of you guys will start noticing, right? And how I believe a lot of traders are just lazy, not because one thing works over another. They're just lazy and they only want to use one thing, or they are not as bright like my brain, right? I want to teach all of y'all that your brain can expand to what you make it. And so knowing all of these things is not a lot. Knowing premium and discount is not a lot. Having your measurement tools for deviations and different algorithmic things is not a lot. Knowing your reapers, knowing your voids is not a lot, ladies and gentlemen. It's not. You need to know these things. Even a stochastic oscillator, knowing what overbought signals on multiple charts means at a certain session, knowing what oversold signals mean in a discount in a certain session. Like, this is not a lot, ladies and gentlemen. Knowing what your EMAs are doing, knowing that if there's I don't talk about EMAs on my reads here, but in a discount, we do cover advanced EMA charting lessons and tutorials that do work with order blocks and premium discount. That's crazy, right? All right. So a lot of these traders you meet are just lazy. They just want to do it the simple way. They want to do it the easy way instead of being able to understand, like, look, this was from where to where? This is from there, right? I just want to show you one more time from there, this blue to the top of the blue, which is the top of the chart. This is the 50% of this. So it crashed through the 50%, made an order block, but not steep enough into the arrays. It was sweeping. It swept and then went back up. Got to the imbalance, got to the mitigation. This is a strong mitigation zone right here on this chart, because there was a lot of bullish orders that went in. Matter of fact, there was a lot of bullish orders. Since we're far away from that mitigation, you come with me and I give you a new home. Right? So this is the nearest mitigation. You can drop these mitigations down, right? So this was the mitigation point here. Oh, that's crazy, huh? Right? Mitigation, letting go of orders is a mitigation. Oh, next mitigation point. Oh, they drop below that. Oh, boo, we're in trouble. Oh, let's get out. When it comes back up, let's get out. We're in trouble, man. You know what I'm saying? That's all this stuff is. Boom, their next mitigation probably here will probably be here. Oh, there was a rally here. Oh, the positions. Oh, they got crashed through, man. We in trouble. Oh, so now what? When we come back up, right? It came back up and now you got another double mitigation, boom, mitigation here, boom, mitigation. So double mitigation. So you got a new recent time frame mitigation with the older mitigation, both in the discount. So we can seek a further discount. This is your last bullish array right here. This was let me label this, your daily order block in your discount region. What? And then you have a 4-hour order block also stacked below the daily. So I don't expect it to actually manipulate through this daily on the daily chart. On this time frame, it can get in here and it can close. 4-hour bars can close in here. On the daily chart, it should show as a rejection to this, right? Or if it does close past this on the daily, or if it gets through this on the daily, I know that we're seeking further discount range, which at this point we're in the continuation discount range, because this is the continuation bullish range, right? For it to go into the premium. We forecast that, right? But we are not dogmatic. What did it say? No dogma. We go with the charts. So if the chart keeps going down here, we wanted to buy up from here. We might get a little small buy up, and then it might hit like a crazy bearish block that printed on the way down. That should be like in here, right? Boom. And then what? Up, and then hit that block, and then boom, right? To where we still have this discount down here. So you will hold your head and say, Why is it dropping? Why is it dropping? Why would you hold your head and say, why is it dropping? If you know your dealing range. So I'm going to wrap that up, ladies and gentlemen. Make sure you subscribe, man. This is the most intense financial analysis on the market, on the free world, on the free net. Tell your folks, come down, see me, come down, see the rain, man. We really got these strats going brazy. All right. So we are logging out for now. Adios, amigos.